Good morning and welcome. Petro Radio News Hour. Joe and Jason on this Hump Day Wednesday. I hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And this morning we got the inflation data. That's probably the big data point of the week. It came in as expected, but I guess if there's a negative to it, I guess as expected was hotter inflation than last month. It went from 2.4 to 2.6, which you would think, well, that's not very good, but again, they said, it's okay, don't worry, core inflation 3.3. Remember, it's supposed to be 2. So when you say 2.6, you're really missing it by a lot. And then when you go to the core inflation, you're like, okay, you guys really aren't even in the ballpark at 3.3. The bond market wasn't buying it. So the bond market, it was lower early before the number came out. As of right now, the bond market is back to even at 443. So you can see the bond market escalating again. A chorus of companies now. It just seems like the names don't stop. It's calling for 5% on the 10-year note. The latest now coming out from Templeton, for Franklin Templeton, joining J.P. Morgan, joining, who was it? Who was the first? T. Rowe Price. All now saying that the amount of government debt supply is going to drive yields higher, getting from 4.5 to 5. That's reasonable, as they called it. They're saying that investors should see a U.S. deficit blowing out enormously. So, Jason, we kind of talked about this a little yesterday. Right, when we think about the next administration coming in, and we know what the plans are, and it looks like, listen, Trump filling that cabinet. I will say this, much different this time around than last time around, and the loyalists are piling up, and I think Templeton's got it right. We are going, and we said this, right? We know the supply is going to be as well, blowing out enormously is what Franklin Templeton was saying today, joining J.P. Morgan in that. And here's the thing that was interesting. They didn't even say 5%. They said that the yields could then go well above 5%. So, Jason, interesting comments coming out of the financial markets. And remember what we said, listen, and yesterday we really said it out loud. It will go as high as it needs to go. And unfortunately, we know how it ends. Today, the dollar again rallying. Gold's holding in there today. So gold held 2,600, is up today with the dollar rallying. I think people are starting to get a little antsy about how high these yields are really going to go, Jason. I think for anybody that's saying that we're not going to 5, I think that's misguided. And now I'm getting a little uncomfortable. Could we go well above 5?
Yeah, I mean, I think the borrowing is going to be on short term, Joe. That's where a lot of the money is going to pour into. And so to get interest in something that's 10 years, can you imagine holding your money for 10 years in this situation? I know that when you want to inflate your way into a better market, which is what the Fed's going to do, they don't. That's not going to be with longer term debt. So they're going to have to raise the prices to make it attractive, right, Joe? And if the inflation comes back, 5% ain't going to be enough, is it?
Yeah, so it's one of those things. On I think the big part is going to be the scale. How much more debt are we going to see? I think that's going to be the key. I don't know that answer yet. Mm-hmm. None of us know that answer yet. But when we just look at it from where we sit now, there's a lot of things already pre-built in that are going to be driving this debt market higher, right? One of them being, now, can we get another 20% year on Wall Street next year? It's possible. I hope we do, because if we don't, right, that's going to add hundreds of billions of dollars to the debt. The interest already much higher than what they were projecting, adding hundreds of billions of dollars to the debt. And then we got to see what Trump does. Right? How much tax cuts? What's the tariffs going to do? All of these other things. What are the offsets going to be? Are there going to be offsets? Now, I will say this. He's going to have Musk and Vivek are going to run the new let's trim the government team. Let's see what they come up with. But like I said, here's the problem, and I'm just being brutally honest about it. If they're not cutting Medicare, Medicaid, Social Security, and defense, and of course the interest is what it is, Jason, there's not enough left to actually make that big of a difference. When you think about it, all the other stuff combines a little over $1 trillion. Right, let's go crazy. It's $1.5 trillion. Okay, what if you cut 10%, which would be massive? That'd only be $150 billion. That's it. Yeah. This is why they're all talking about this. They just don't want you to know about it. We'll be back after the break. 800-951-0592. Joe and Jason, Picture Radio News Hour on this Wednesday. A quick look in at the markets. The Dow up 140 today. The S&P's up 7. The NASDAQ is down 20 points. The 10-year note, like I said, just hanging around right now. 443. Got down to about 437. And then when the inflation data came out, right back to where we kind of closed at yesterday. The Japanese bond market, I'm paying attention here, over 1%, 1.05. We'll keep our eye on that. Are we going to have another problem with the yen? We'll see. Crude oil flat today. Gold and silver are up today right now. Gold's up 6. Silver's up 5 cents right at this moment. And then looking at the currencies, the Japanese yen over 155. And then Bitcoin flying at 93,000. The government, what are they calling it? I want to make sure I get it right. Where they're going to have Elon Musk and Vivek Ramaswamy. They're going to head a new department, the Department of Government Efficiency. And apparently it spells out Doge, right? That's the Musk coin, the Doge coin, D-O-G-E. So I guess people kind of put that together, got yourself a rally going. Who knows? I don't know a whole lot about any of that, but we'll get to the government efficiency in a minute here. Check out our friends at YRefi. Get more diversified. Get up to 10.25% fixed rates of return. I saw it. Maybe we'll cover it today. If we don't, we'll cover it sometime this week. Once again, apparently the average guy didn't get anywhere near the big gains out of Wall, which kind of makes sense because it's hard if you're in 401ks. Hey, I only want you to buy NVIDIA, Apple, Amazon, Tesla, right? You can't do that. You're not allowed, they don't offer those types of plans. But nonetheless, 10.25% fixed rates of return. You can use it as income. You can turn it on. You can turn it off. You know the drill. Got to have a minimum of $50,000. Check them out. InvestYRefi.com or just call them at 888-YRefi24, 888-973-2924. Some interesting things coming out of the government efficiency, Department of Government Efficiency, their goal. What's their goal? Okay, so this is going to be important because when we talk about deficit blowouts, what J.P. Morgan and T. Rowe Price, Franklin Templeton, remember Bank of America, they've sent the biggest warning of them all, is they're saying they don't have faith in this group here. What's the goal? Slash excess regulation. Now, Trump did that the first time around, right? He tried to cut some red tape. If you say, hey, definitely one of the positives, he tried to cut some red tape. How successful he was, I don't know, but they said for every one regulation they cut two. Hey, I'm good with that. I'm cool with that. Cut wasteful expenditures and restructure federal agencies. Elon Musk said that they could cut at least $2 trillion from the federal budget. Like I said, unless Elon Musk knows something I don't, Social Security, Medicare, Medicaid, defense, and interest, you can't touch those. You can't get to that number, but I like the thought. They say that they're going to conclude their work. This is how long it's going to take, and this is maybe the problem here. No later than the nation's 250th anniversary, July 4th, 2026. So, at least for right now, it does not appear that these guys are going to have the cuts in 2025. We'll see. Here's Vivek and what he says. And again, I love the sentiment. I really do, because we do need a lot less government. Get in there on day one. Say that anybody in the federal bureaucracy that is not elected, so in other words, obviously you can't fire the senators, you can't fire the House of Representatives, you can't, I don't know if the federal judges get elected or not. I don't think they do. I think they get appointed. So, but if you're not elected, if your Social Security number ends in an odd number, you're out. If it ends in an even number, you're in. That's a 50% cut right there. So these are the types of things that they're at least saying out loud, Jace. Obviously, I don't think you can do that, but at least they're talking big.
So you're telling me the first thing that we have to look forward to is that they're going to come up with a brand new department, the Department of Efficiency. The first thing is going to be that you're going to start and fund a brand new department in the government. Right. You're going to fund and start a whole other department, and that's like the war on drugs or the war on or you have freedom fighters. What are they fighting? Joe, what they're going to do with efficiency, which is pretend you have 20 places where the money goes. Yeah, they're going to cut money from 10 places, and then they're going to brag about all these 10 places they cut the budget and how many people they fired. But they're not going to talk about where that money goes, which is it's just not going to. It's not going to be savings. It's not going to be trimmed. It's going to go somewhere else. Those big departments, like the military and Social Security, they're going to need a little more money, right? Maybe this is how they get the dinosaur to walk a few more feet before it dies, Joe.
You know, and it's I think this is a new department. Obviously, I would hope that we had this department, but I think it's new. But I don't quote me on that, but I think it is, because they said it says Doge, and they got all excited today. But he wasn't done. So then he says, hold on. So odd number, you're out. Ends in an odd, you're out. Even, you're in. But then, of those that remain, if your Social Security starts in an even number, you're in. And if it starts with an odd number, you're out. Boom. Boom. That's 75% right there. So I'm all for it. Right? Hey, you want to cut the government? Obviously, I don't think we can fire 75% of the federal bureaucracy, send them home packing. I mean, I think it would be wonderful, but that would be some tough times.
It's a good soundbite. Yeah, I could see it now, the picket lines of people saying that it's odd number prejudice to be firing the people with odd numbers. You can't do that. That's against my Social Security number.
So now listen, how does he come up with this number? So I thought, well, okay, just kind of made it up. Apparently, this is the thought of this. Most people who run a company, especially large companies, they know 25% of the people do 80 to 90% of the useful work, and these government agencies are no different. Which, okay, let's just say that's true. I would still think, would you rather, like, okay, who's the best guys we got, and keep those? But again, when you're going to fire that many people, Jason, maybe that's the best way to do it, right? I don't know, right? You know what? Just go put them all lined up. 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. Okay,
well,
all the ones step forward. You're out.
Well, and let's just go to what he didn't say. I'll go back to the example. There's 20 places to put the money, right? 10 places get slashed. 10 places get funded, right? Just because you fire all these people doesn't mean you can't rehire them in some other place in the government. Well, we're hiring them in these really important places. We got these really important people coming in, but they won't talk about that, Joe. If they fire a bunch of people, they're not going to tell you, oh, we fired them, but then we placed them in another department. Maybe cut their wages a little bit to try to show a semblance of fiscal responsibility. It's just a game. It's just a game. You know, here's the thing. What is the budget the last time? What is the budget this time? If that's smaller, key, right? It's all a bunch of bull, right?
Well, we'll see, because that's a great way to look at it, right? If the budget was, and pick a number, $7.2 trillion, if by July of 2026, so here's the thing, July 2026, so you got August, September, and then the fiscal year ends. So fiscal year 2027 would start, that would be October. If the budget is still, 7, like I said, of course by then, who knows, probably be 7.5, maybe 8 trillion, right? If the budget actually goes down, then they've done something, right?
Yeah.
Obviously, the budget can't go. Well, you can't say, well, okay, Vivek's going to fire 75% of the non-elected people, and magically now the budget goes for, and let's just keep it simple. Let's just say it's $8 trillion at the time, because it probably is going to be pretty close. That doesn't mean it goes to $2 trillion. Right? You're just firing non-elected people. And like I said, Social Security, Medicare, Medicaid, defense, and interest on the debt. Right now, we got a budget about $7 trillion, and those four categories are in the high fives. Right, so you got maybe $1.2, $1.3 trillion. Still got the department. You're just firing the people that are working in. I mean, maybe with that. Think about with that number, which is not going to happen. Could you get $1 trillion? I don't know. Maybe half a trillion. If you fired 3/4 of the unelected people, maybe we get about $500 billion. I think that would be about right.
The budget will be higher. You know what I'm hearing, Joe, is they're giving us a timeline on the next 9/11/COVID. That's what they just did. Because as soon as that false flag event happens, they'll say, well, we were going to do it. We were on our way, but then the North Korea war started, and they killed 500,000 people. Now we're embroiled in a ground war in North Korea, and shucks, darn it all, we're going to have to spend more money. So what they did, Joe, I think they gave us a timeline. Before July 4th, 2026, we'll be embroiled in another fake emergency. So you better buy a bunch of gold before then. That's what I have to say, Joe. That's what I see heading our way.
You know, I hope that's not the case, but a green shoot for me. At least we've got two unelected. Right? Two unelected people saying, let's cut the government. And we actually, this needs to happen. And I hope people, and here's the sad part, because the magnitude of what Vivek was saying, people are like, okay, that's ridiculous. That's crazy. Come on. Okay, you can't fire 75%. That's the magnitude it needs to happen. Honestly. Yeah. That really is the magnitude that needs to happen. On top of, you still got to cut Social Security, Medicare, and Medicaid. Or defense. I don't care which. Pick one. Well, I probably got to pick 2 out of 3. Especially if the 10-year note's going to 8. 800-951-0592. Patriot Radio News Hour, Joe and Jason on this Wednesday. The Finance Ministry of Russia has announced they're going to increase their gold buying by 35.5% per day. Right now they're going to spend 4.2 billion rubles a day now. That works out to a little over $43 million a day. Russia says the drop in the gold price, a key buying opportunity. $20 gold pieces, right? Yesterday, $27.95. We had gold fall a little bit. Today, $27.75. Silver. By the way, they just came out with the silver report. Don't know if you saw it or not. Of course, we told you. Another big silver deficit. And they said if it wasn't for the drop in the United States as far as silver coin and bar consumption, it would have been out there. There was a 40% drop in silver consumption in the U.S., but silver, the deficit blowing out higher. They expect another record deficit next year, saying that simply mine supply, despite the rise in price, less than a 1% rise in mine production for 2025. And again, that's assuming everything goes well, right? So today in silver, you want to take advantage of the silver pullback. We got dimes, rolls of dimes, and rolls of quarters on sale today. Rolls of dimes. Get 50 silver dimes, pre-1965 silver dimes at $120. A roll of silver quarters, that's 40 silver quarters. So the dimes are a $5 face value. The quarters, $10, or twice as much silver in the roll of quarters at $240. And remember, Russia says they're going to start adding silver to the reserve. Get on it, 800-951-0592. Now, what did people say about this inflation report? Lael Brainerd, remember her? She was going to be the next head of the Fed, but Donald Trump won. She is the White House economic advisor. She said that this report showed that CPI inflation is close to its pre-pandemic rate. It is? No, it's not. 2.6 before the pandemic. What was it? 1.6? We keep fighting to lower costs for families and key items like housing and health care against policies that would undermine the progress of bringing down inflation. Here's what's funny. To bring down inflation, you would actually have to have the number be negative. They're not even really talking about bringing down inflation. All they want to do is slow it, right? Maybe you won't notice it. Does anyone really believe inflation is only 2.6%? How about chief economist at Fitch? This guy may be important. The last mile of progress in getting inflation back to 2% is proving to be long and arduous. Airlines continue to heat rapidly skyward, right? Airfares, I guess, right? Go figure. They all have to get 20, 30, 40, 50% raises. It looks like most forecasters, including the Fed, have got it wrong on rental inflation, which just refuses to fall. Uh-oh. How about Moody's? Moody's has issued another warning on U.S. debt, saying that they blame the election of Trump now, that they're going to downgrade the U.S. debt because of the anticipated spending. Goldman Sachs, the bang-in-line core inflation, right, 3.3. That was what they were expecting. That's what they got. Leaves the Fed on track to cut rates in December. So there you go, right? Hey, let's just cut the rate. Uncertainty over fiscal and trade policy. There is a risk that the Fed may opt to slow the pace of easing as the new year chill sets in. It's time to stop worrying about the Fed and inflation, according to market strategists at TradeStation. Stocks are on autopilot since the election, and today's numbers do nothing to hurt the trend. December rate cut still in play. And Jason, the list just goes on and on and on of people saying they're still going to cut rates. And, oh, by the way, don't worry about 2% inflation anymore. Who cares?
Well, and I think it wasn't Jerome Powell that said that, cuts all the way into 2025 are pretty much on the table. So there's one thing you said at the beginning I'm going to ask you, which is Trump is in power, so Lael Brainerd will not be the next. If he makes a change, it won't be her. I think she is absolutely the next person. I don't care who's president. So I don't think Trump, if he makes a change, is going to steer away from her at all. She's the brainchild of CBDCs. She has to be next.
So here's what's interesting: the economic plan with Vivek and Elon. July 2026. That's right about when Jay Powell's term comes to an end as well. So Jay Powell, his term comes to an end in the middle of 2026 here. So we will. It's kind of interesting how all that's coming together. It's going to be very interesting how all that works.
More evidence to me that something big is going to happen right before that or several months before that. So. Wow, Joe. It looks like you talked about the year of chaos. 2026 might end up beating it because there's enough that bakes enough time into the cake for this rebranding and the resurgence, the inflammatory inflation that's coming back. Because it's not going to happen overnight. It'll build, right? And this next wave of inflation, that's probably about the time it's going to be at its worst, I'm guessing, Joe. It's right about then. Just like 2019 when the repo market had all of its stress, and then. Lo and behold, here come the boogeyman disease, right?
Yeah, it's going to be, Yeah, I guess, is 2026 on the clock, right? I guess it is, right? That's probably when the next potential disaster may be coming. We'll be back after the break. 800-951-0592. $20 gold pieces, $27.75. Heck, you buy 10 or more, $27.50. And then on the silver side of things, rolls of silver dimes on sale today for $120, right? 50 silver dimes, Really, you need some eggs from the farmer. A dime is going to get it done for you. The rolls of silver quarters, twice the amount of silver, on sale at $240 at 800-951-0592. Record industrial demand and a recovery in jewelry and silverware will lift silver demand to 1.21 billion ounces in 2024 with mine supply, like we talked about, not even up 1%. Exchange-traded funds. So very much like gold. The silver ETFs, the gold ETFs, they weren't really attracting any money over the last 3 years until this year. Exchange-traded funds, first inflow in 3 years happening in silver. The report that came out says the director of mine supply at the Silver Institute, in case you wanted to note, they're saying that the pricing, surging 34% this year at the peak, which was about $35, touched $35. Global demand for silver is projected to rise again next year. Industrial demand, 7%. It will surpass 700 million ounces for the first time ever. By the way, that's the path that it's been on over the last several years. Higher demand also expected automotive. Obviously, they call it greater vehicle sophistication. Let's just call it what it is, right? The electric vehicles. They're saying both silverware, jewelry demand. By contrast, right, 15% drop in physical investment. But here's the problem. That's a lot. But that's only like 200 million ounces. So the physical demand isn't is no longer really one of the key drivers of silver, because industrial demand, it's just overtaken the entire market. Industrial demand for silver now is not quite half the market when you look at what's going on. But Jason, they're painting the picture now that going into 2025, they're saying that they're anticipating the fifth straight year of silver shortages. This one says 182 million ounce deficit, the same that it was in 2023. And they anticipate that deficit to remain at that level or potentially higher if there's a pickup in investment demand for 2025. So, Jason, it's a much simpler pattern for silver when we look at why is silver going to go higher. This goes back to simple economics, right? When somebody wants silver and there's no silver available, what happens? Well, what if I pay you more? Will you give it to me? And then the next guy, well, wait a minute, I'll pay you more than that guy, and then I'll pay you more than that guy. That's what's happening in silver right now.
More demand and less supply just means higher price. It's pretty simple. A lot of our shows could probably be a 15-minute show if we just stuck to the basics, right, Joe? Here's what we're selling. By the way, there's less of it, and there's more demand. For the last how many years, how pretty much that's it, right, Joe?
Yeah, and this is something where when we look at this whole world, the planet, this is the same thing playing out all over the place. right? All of a sudden, with maybe the exception of a few products, it seems like there's shortages just about everywhere, or there's only just enough. And, of course, one of the big drivers, let's face it, I know we talk about China, and China, okay, well, they're only growing at 4%. It's still huge. Let's not forget you got India, most of the BRICS nations. You know what I didn't see in there, though, that I wanted to see, but I didn't? I didn't see how much they say military demand's going to increase, right? That wasn't in there. I wonder where that goes. Does that go into industrial, or is that its own category? That would be interesting to know.
Yeah, well, I guess it depends on how much the military's needed, right, Joe? Just once again, like I said earlier in the show, you can just shuffle the numbers around. It's just money, right? Money's an idea. You can just shuffle things around. You can make the math change until it works for your needs. So, like I said, there's some simple numbers that you can figure it out. You can make it. Just don't get lost in the fog of the numbers when I'm telling you to look at the right hand when the left hand has all the answers, right, Joe?
Yeah, so when we get back, we'll go through things you won't be able to afford over the next 10 years. Pretty interesting, I guess, collection of things that people may not be able to afford in the next 10 years. This will be, I guess, the new middle class. Pacer Radio News Hour. We'll be back after the break. $800-951-0592. $20 gold, $27.75. 10 or more, $27.50. And then on the silver side, rolls of silver dimes at $120. Rolls of silver quarters at $240 at 800-951-0592. Things you won't be able to afford in the next decade. Popular retirement destinations, Florida, Arizona, and California, will no longer be affordable for the, quote, middle class in retirement. Private education of children will no longer be attainable for the middle class. High-speed internet and premium streaming services. Yeah, gosh, I don't know, but maybe a cutback, right? You're going to have to pick and choose. I
disagree. I disagree with that one, Joe, because that's a major arm of propaganda to get people listening to this narrative. So that's the first one I sort of disagree with.
Personal fitness and wellness services. And in this, they're talking about personalized trainers, dietitians, boutique fitness classes. The costs are rising. These will be luxuries.
Yep.
Specialized medical treatments. So the conditions, cancer, rare diseases will become unaffordable. Insurance won't cover it. That's going to be probably the biggest problem. Organic and specialty foods will also be a luxury, skyrocketing food cost. The latest technology gadgets, right? That will become unaffordable with the price. Eco-friendly home upgrades. Yeah, so if you want to buy a home, you're not going to be able to pay the extras. Comprehensive insurance plans, right? I'm assuming that's going to be like your long-term care and stuff like that, right? All of those costs. Last but not least, Jason, home ownership. Those were the 10 things they say in the next decade the middle class will no longer be able to afford. And by and large, there's probably a couple that maybe I disagree with, right? But pretty close.
The technological devices will still be in everybody's hands. Once again, you can't get people to listen to your narrative. You know, we got Tracy that calls in. He's got his cell phone going, right? So I get the feeling that they want enough technology in your hands so they can get the message to you. So I believe the streaming services, which is an arm of propaganda, and but everything else, Joe, that list is pretty. It goes right back to what we say: how much freedom can you afford? You know, if you want to be healthy, it can cost money. You know, but it is going to get more expensive. Everything is going to get a lot more expensive. It already is more expensive, Joe.
Yeah, it's sad. I'll say this. I know, like the private school educate. Wow, man, where my kids went to school. You know, my kids. You know, they've graduated, all this stuff. It's crazy how much more expensive it is from where it was just 10 years ago. And it is. I think those are ones, you know, home ownership. We kind of known that for a while, you know. Rent. Who was it? I forget. Was it Moody's? The Feds got it wrong. None of these rents are going down. Yeah. Whew. I know, right? It was a tough one. Hey, we got through it. Jason and I were coming right back with the half-empty cup. Stay with us.